Hello everyone! There aren't many of us yet, but we're just getting started. Join us. In the previous video, we talked about how Bitcoin has every chance to rise to around $115,000, and there were reasons for that. Let's take a look at the chart. I pointed out that we could rise up here because we broke through all the moving averages. Well, actually two, the 50-day and the 100-day, the red and the green ones. The green one is the 50-day moving average. Technically, let's remove the markings. We have every chance to return to this area and test them from below. But only technically. Beyond that, it still continues to look downward. Because in order to talk about going long, we need to see two things happen. And the second is much more important than the first. The first is a daily candle closing above all the moving averages. That is, it should close above $115,700. The second, much more important event is a close above $121,700 on the daily candles so that we engulf this huge red one. As long as neither of these things has happened, you shouldn't even be thinking about going long at all. Because according to technical analysis, this is a short. What are the technical targets? This is our target. That's $107,250 to $270. That's the 200-day moving average, the orange one. With a fairly high probability, I think we'll also update this low. But there are, let's say, different ways we could get there. Most likely we'll see a sideways movement between the moving averages, where the price will move towards the 200, then to the 50 and 100, and then back down again. And then after that a new low will be set. What will help us figure out which scenario will play out, whether it's straight down or through a sideways movement, is the review of the index, most likely the S&P 500, which I'll record today as well. That's another reason to subscribe to the channel, because I do reviews of various financial instruments. Now let's look at the weekly candles, and turn on the chart markings for a second. So, in terms of levels, our key support is at $108,377. Here is the lowest close. And with a high probability, we will also reach this level. Another point is that I expected us to reach it first, and then move to the 115 area. So now let's remove the chart markings and look at the weekly candles. On the weekly candles, the situation is, let's say, bearish, but with some caveats. Notice that this green candle from last week, despite its huge size, was not engulfed. That is, we closed above the base of the green candle, and as long as it hasn't been engulfed, by formal criteria, this is a long position here. By formal criteria, I emphasize. But if this week we engulf the green candle, then the situation will turn the opposite way. It will be a short. But what else would I like to draw your attention to? Look, right here we touched the 50-week green line once. Here's another one, and here's another, and here's another. Yes, we didn't touch it, but we came very close. But this suggests that the next move could take us to the 100-week line, which is around $80,000. Well, 80 to 82,000. Something like that. So you need to be extremely careful. And finally, the fact that after updating the high, we closed the week in red and selling began, that speaks in favor of a decline. Now let's look at the monthly candles. On the monthly candles, the situation probably indicates the highest risks of a decline. Why is that? Because, look, here's one high, here's the second high, and here is the third high. They were updated one after another, month by month. And what is happening with the RSI? Here's one. Second, third. So this is a double divergence. That is, while the price highs are rising, the RSI highs are decreasing, or at least not increasing. And here lie the greatest risks, and that grand drop we saw, when in just one day Bitcoin fell from 122,000 to 102,000, could be just the beginning of a much larger and more serious decline, with a target level in the area of, simply put, $56,000, where the 50-month moving average is located. You can see we've already approached it several times, which means we could go significantly lower. And technically, a very important support level is this one right here, $102,600, which we've basically already tested. As long as it holds, we are formally in a sideways range. In a sideways range, but against the backdrop of a double divergence. Subscribe to the channel, and today there will be a review of the stock market. Goodbye.